Good evening. It is May 1st, 2023. Wanted to look at some things that I thought were interesting. First of all, we've been using this tool, Bookmap, to look at liquidity areas. And if you look at current futures, there is a ton of liquidity. I've not seen this much in a very long time. But that would explain why days going into Fed meetings, we just move sideways. Because we have a ton of liquidity above and a ton of liquidity below, and they just move back and forth, and they eat up this liquidity. Therefore, Tuesday, I don't expect to trade much of anything. Here are your main levels: 4,200, 4,172. If we come down to 4,172, look for that to hold and to retest that 4,200. We also have some new guys up here at 4,240 area, 4,237, 4,240. This is starting to come in, and then we have our 4,140 guy coming back in. That was from before the rip your face off rally, right? We had that guy there. But right now we're just chopping in this zone. And to me it looks like, now part of the reason, I guess the European markets were closed or something on May 1st, so that's why this liquidity didn't show up till now. Now we have global participation in the market versus just the United States. And as we saw, we got to 4,200, and what happened? We sold off, right? This is a pretty important tool. I like it. I haven't quite figured out the best way to use it yet, but I do know that this little ball, this is the market where it's going, and it's going to the red places, right? It's that simple. So these are orders, but this is going to drift down here and try to eat up this liquidity, right? When it gets done with that, it's going to move up here to 4,200 again, try to finish off this part. Until then, the bigger picture, we have a lot of work to do in this whole area, so we'll probably just chop back and forth on Tuesday. Let's take a look real quick. One thing I want you guys to look at is this. This is green. It's very interesting. I woke up this morning and turned on tradingview.com here, and this, instead of being red, is green. So we're now green on the year. It's interesting. It's quickly going to turn red when this goes back to tomorrow. We'll be up here and we're down here. But this may be a sign of sorts telling people, hey, the market is cooling off. We're starting to get back in a bull trend again. We've got a double bottom here, a high, a lower high, or a higher high, higher low, higher high, higher low, right? And now they're just chopping sideways until they can push up and get into that higher high. And I'm surprised we didn't get very much farther today. I said at 9 o'clock this morning, I said, 417.58. Let's take a look at some numbers real quick. Now, these numbers, these have been on this chart for over a year now, right? Most of them. The main ones, so the way I have this coded is, green is typically like bounce areas, buy areas. Red is super resistance areas. Yellow, kind of whatever. Purple, kind of whatever. Just to be aware of these areas, right? But then you got this dotted line right here. This is 397. Above 397, we're bullish. Below 397, we're bearish, right? And then that one, 383. I think that was just an area to buy. Last time we came down there and bought it. But anyway, 397 is the bull bear thing. I would not be surprised if we were below 397 by the end of this week. That would not shock me, because if you remember, if you guys watched my videos 3 weeks ago, well, let's see what I said. Let's see what I said. Here's my channel. I don't charge anything. I don't make any money off of anything. That way you guys can't sue me. Right? Let's see what I said here. ES 4160 line in the sand. Let's double check my work here real quick. ES 4160. So we're above ES 4160, right? So that should have been the line in the sand. We were expecting a reversal there. We got one, and they reversed the reversal, right? 50 is becoming support. Everything's curling up. Everything's looking good for a breakout, right? We've been in this area forever. We broke out once and failed. The expectation is when they come up again, they're going to break, right? That's what it looks like. And then I flipped and said, wait a minute, I missed something. Lower high, bear trend in play. And this is what I want to focus on again. High, 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 high. Right? So we're already starting to reverse here, if you can tell. What was this candle here? High was 42.0850. Whatever, 42.0850. That would be the lower high, right? If we break above that, then we can start making the argument of the bull case, right? You got low, high, higher, low, higher, high, higher, low, higher, high, right? And they're going to keep testing this candle, try to fill this gap here, and then if they do that, they might as well just put in a higher high here and completely confirm the bull market, and then we just take off, right? So you could say, as long as they don't break 42.0850 ES, you can go short. Now we're 20 points away from that, 30 points away from that right now, so that's going to feel like a lot, because that's, that's, I don't know, 418, something like that. 418.30, I think. So if we get above 418.30, we can pop higher, fill this gap, get up to 422 area in the SPY. But you could argue that we still have lower highs right now. And you could say that they invalidated it because they took this one out too, if you want. But I want to look back. If you look over here, what I just clicked on, I watch this guy a lot. He's really smart, figuring out money. He's also free, I think. But he shows this 2008 chart. So that got me really curious. This isn't my idea. This is his idea. If you go back to 2011, let's go all the way down here to 2011. And this wasn't a major crash in our terms, but at the time it was. So, but basically, if you look at how this worked, this is what I want to talk about today. Even though we had a high, a lower high, and then we came up and put in a higher high and we took that out, even though we did that, we still failed, right? If you look at this chart, you know, that was a pretty wicked drop. 1350 down to 1100. You know, now 200 points to us doesn't sound like a lot. They do that in a couple weeks now, but back then, you know, that was a pretty significant drop. That was a 25% drop, 20%, 25% drop from there to there, right? So if we were looking at a 25% drop in the market right now, where are we at now? 4,200. So, you know, knock off 1,000 points, 25% drop, 3,200, 3,400 maybe. Could come very quickly. And what I want you to notice about this one that he didn't really mention is, so we still have this pattern on the larger time frames. It's still high, low, lower high, lower low, right? Before they eventually reversed. But this pattern right here is what caught my eye. When he was showing his charts, I thought, hey, you didn't mention that. This is a good short pattern. What do I always say? A failed breakout is always stronger than the initial breakout. Because you got like three things. I was talking to my friend Ethan. You got like three things going on. You got these people that got in trying to buy the dip. That's their stop loss. You got these people. That was their stop loss. And then you got all the shorts to enter in at both of these places. So you got like four things going on right here, right? Plus you also have, technically, you've got these people's stop losses. They got in on this breakout, they got back in there, and they failed. So you had like five things against you right here. Now if you go over and look at the Dow Jones right now, let's just look at DIA for a second. If you look at this one, look on the weekly chart here, we have the exact same pattern going on right here. And we talked about this double test of this trend line. SPY is a little more sloppy. It's come down, it's come up, it's come down, whatever. But the Dow Jones is pretty clear. Actually, US 30 is probably more clear. If you look at this pattern from the high up here, yeah, I guess not. Maybe DIA was better. But anyway, here's what my point is. Is you have the exact same pattern as 2011, right? So you have a high and a low and a higher low. It doesn't matter that it took this out already. In the long run, if we take out this, it's going to do the exact same thing as 2011. So that was my main point of this video, is, you know, even if we get above, oh my gosh, every time, even if we get above this high right here, we still have to challenge this one to get into a higher high. And even if we do that, we still have to challenge this one. And even if we do that, we still have to challenge this one, right? That's asking a lot. But I'm just seeing, you know, the same idea as 2011, and I really like this idea, is you enter short under here. If they take this out, then, you know, all bets are off, and it just goes down. And then we've got this trend line right here. Let me show you this. Watch this. What was support is now resistance, right? So you could do a couple things. You could just go in short and hope we're right, which isn't right, and your stop loss would have to be this trend line. But if we do that, you know, they could just chop like this for the next 6 weeks and just kill your position, right? So that's not necessarily the right thing to do. What you could also do is probably what I'm going to do here is make 4208.50. As long as we're under that, as long as we're substantially under that, I'm just going to stay in. And then ultimately, when we cross this 3840 area, that would be the place for a flash crash. But yeah, I'm just not convinced that everything's okay yet, because I don't see in the volume here, I don't see like reversal volume, right? So we had this marked the bear end here, this marked the bear end here, this kind of stuff marked the bear end here. This was 2020, right? We had like 1 week here that was high volume, but what's interesting with that is that was on a very small body. So I don't know if that would be enough. If anything, that's just where everybody just got in long, and that's where their stop loss is, because that's where they touch this trend line, right? So you get below that, this 3830 area and 383.15, that's where 383.15 came from. Remember this? Probably this area. Get below that and it's over. That's a flash crash. For tomorrow, again, like I said, there's really nothing going to go on. You can play scalps. 4172 is going to be, let's look at our numbers for tomorrow. Look at our main levels of support here. So I said 417.58 would be the top. It was. 414.85 would be support. They came down and tested it after hours. So let's say, in this area here would be considered support. If we do some kind of thing like this, then look for a bounce back up to this 4200 area. That was weird. And that's actually higher. 4200 is like down here. So if we put in a lower high right here, that would be a really good entry for a short on a retest of 4200. If we did that during FOMC. But anyway, getting below 412.80 all the way down to 412.17 should be some form of support if you want to play scalps tomorrow. So if we're opening down there, you get down there, look for a bounce, right? If we open up here, chop around up here for a while, look for another sell-off. But I'm thinking there's going to be a buy the dip crowd tomorrow, so look for calls there. But I don't want to swing anything. I don't want to hold anything until FOMC is over. I'm curious to see. I'll post this right before FOMC starts, and we'll kind of see where this stuff shows up. But right now 4172 looks like support. One thing I did notice the other day that's important, this when we were doing this earlier, 4160 and 4155. So you have like buyers right here, but then you got another line right here. I think this is actually a stop loss. These are just orders. They're not necessarily buy and sell orders, I think. So I'd say if they break 4160, 4155 would be a good place to short for a drop, because there's not much below that. So again, just kind of look at this area, expect back and forth tomorrow and into Wednesday, and on Wednesday I will pull this up during FOMC and see what's going on. But I just wanted to make that point real quick. We're still at we're especially in the Dow Jones, and the Dow Jones should be stronger because it's got transports and stuff and industrials. It's got lower highs still and lower lows in a major trend of lower highs and lower lows. So even though we're up here, technically that could just be a 1, 2, 3, to come down. So, you know, uh, that's kind of what I'm looking for. Take this out, and it's just goodbye market, just like 2011. So I just was watching this guy, figuring out money. If you want to watch him, he's really smart. I was just watching him, and I thought I'd leave my commentary on his video. So yeah, that's about all I got, except Banks. He covers it in his videos. Interestingly, today, you know, PNC Bank had a kind of a bull run, but it was really just retesting this 50 here, and they dropped pretty hard. They gapped below. They took out this green bar, and then fell. So we should have probably taken that off the open. Missed that one. Google, I was trying to short today, just because again it's support, resistance, in an area of resistance. Right, so I'll look to get back in that tomorrow probably. Google short 100 puts. They're cheap enough that you can afford it. But if we take out 100, then we will see a retest of this trend line here, and possibly a bear flag down farther. But I mean, for $10, I think they're like $10 today. That's pretty good bet. If you could turn $10 into, well, you turn into $100 here, turn into $1,000 here, $10 to $1,000. That would be quite a win. And then again, if we break that, we could come all the way down to this $80 area. So I'm short Google still. Amazon, not sure why we tried to buy the AMZN. Not sure why we tried to buy the dip on that one. I should have just left it alone. It did bounce on our 102.25 area during the day. That was interesting, but then sold off at the end of the day. So, but yeah, that's interesting that number's been on our chart forever, and it bounced right there. So there's still people there. Coming up short of that might have been a sign that they were going to go lower than that. So my bad for going against my own ideas, but keep Google on watch, short. Keep PNC on watch, short. Tesla was on our short list. It's already curling over, and it's underneath this 50. So any bounces above this 15-minute 50, right? So let's say you get up like this, and this is curling down. You get up here, look to short that. Tesla short. I took some long position in BBAI because if you look at it on the hourly chart or the 4-hour chart, they're surprisingly holding the 50 here. They flipped it back bullish, and they're holding it. So I took some of that. $3 calls and BBAI. I thought that was interesting. Again, this 240 area, if you take it out, just like Google, if it takes that out, it's just going to go. So, what else did I take? Took long. I don't know. That's really the only thing long I was thinking. IRBO is still looking okay for right now for our long-term position. It's still holding that line, 28.53. Probably should have added there. Uranium, I got out at the moment. Oh, that's what I was going to talk about. Uranium, I got out on Friday, which was a good idea because we pulled back to this 50. So let's look and see if it can hold that 50. If it can continue to do something consolidation like that, we can get a move higher. Last thing I wanted to talk about was the US dollar. And I was just thinking, okay, if the Federal Reserve had a crisis on their hands and they had to choose, am I going to save the stock market or am I going to save the US dollar? I think they're going to choose the US dollar because and prevent inflation from going too high. Because if they don't save the US dollar, then there won't be a stock market for them to play in. So I think they're going to save the US dollar. If you look at this area has been resistance. This was 2017. This was COVID resistance. This is support. This is support. And now we're staying above it. And the reason this is so significant goes all the way back to the 2000 tech bubble. DXY is the US dollar index. If you go back to this was leading into the tech bubble. This was resistance, resistance, resistance. And now it's support. It's holding support. It's interesting that same line from 97 to 2000. And then from there, again, they kind of held this support area and they ran up. This is where we got our other number, 120. Let's see if this is important. So that was a triple top there that coincided with I guess that was just a triple top. Oh, that coincided with the beginning of the fund. So let's look over here and see. It looks to me, if I was trading this, it looks like what was resistance became support, put in a double bottom. Now we're retesting the double top for a bounce higher. And when the dollar goes up, stocks go down because you can't afford stocks when the dollar is going up. The prices of dollar, it's rapid deflation. The prices of things go down so fast because the price of the dollar goes up so fast. But nobody's talking about this. DXY. Nobody's talking about the US dollar right now. Maybe Ron Paul's out there talking about it, but that's about it. Anyway, yeah. Just keep that in mind. Everything is set up for a major recession, except for VIX here. VIX broke down. We've got some levels in this area. 1490. So, I mean, that's kind of the problem with this guessing game, is it can go either way. If we get down to the $12 area, I'd be really interested in buying VIX long. But anyway, that's my idea for tonight. This kind of move for this summer. Sell in May and go away, right? Thanks.